South Korea's trade surplus for November came in at a record high of 10.4 billion US dollars. Total exports fell 4.7% as opposed to a drop of 15.8% in October. Anwita Basu, economist at the EIU, joins me now. So Anwita, do you believe that we could see the rate of decline continue to decelerate in December?
So essentially, we expect the rate of decline, especially of imports, to decelerate, rather slow down, mainly because we are expecting commodity prices to pick up. Whether this is going to happen in December or not is uncertain, and I suspect it's not going to happen in December. I think it's more likely to show up in sort of middle of 2016 when commodity prices do indeed show some improvement. But over the short term, at least you can expect the trade surplus in South Korea to widen further.
South Korea's National Assembly approved a free trade agreement with China on Monday. How will this agreement affect the trade balance going forward?
Well, we don't expect this to have a major impact on the trade balance, especially in the short term between China and South Korea, because China is already one of South Korea's larger trading partners. In fact, it is the largest. And their economic relations are already extremely entrenched. Furthermore, some of the more contentious sectors, such as agriculture and automobiles, are still subject to protectionism despite the FTA. It's only 90% of the products which are exempt from protectionist policies. So as such, I don't think there will be a major shift in the fortunes of the two countries. What is going to be a bigger driving force in the trading dynamics between the two countries will actually be two things. One is China's economic slowdown and also its economic restructuring. What we believe the Chinese will require more from the South Koreans will be more service-driven, high-value-added technology. So there will be opportunities for some South Korean companies, whereas others, especially those which are dealing in the lower tech sphere, will continue to face competitive challenges as Chinese trying to build their own capabilities. There will be a change in dynamics between the two countries, but it won't necessarily be driven by the FTA.
The Consumer Price Index rose 1% year-on-year in November, still quite a bit away from the BOK's 2.5 to 3.5% target. On the other hand, core CPI increased 2.4%, but then exports are still in the negative territory. So with that being said, where could the BOK go from here in terms of monetary policy?
First of all, we expect the BOK to be revising down its inflation target. We don't think 2.5 to 3.5% is a realistic target for an economy as advanced as South Korea is in the current environment. Moreover, the BOK will have to revise, at least review its target, because the current target runs out at the end of the year. So we believe that it's going to be lower. Secondly, the BOK is at a very sort of strange position where its policy is at historical low levels. So we don't expect it to cut its policy rates further over the next couple of years. It is also constrained in terms of tightening policy because of high household debt. So at least over the medium term, we expect BOK to be relatively neutral when it comes to setting monetary policy. In 2016, we don't expect it to make any major changes to its policy. Mid-2017, it might start looking into tightening its monetary policy rates. However, this tightening will be extremely incremental. Essentially, not much to change when it comes to BOK's term.
The Korean won has been on a bit of a losing streak since September this year. What is your medium-term outlook for the currency against the US dollar?
Well, in the medium term, we expect the currency to weaken against the dollar. Essentially, this is because we expect the current account surplus to narrow over the next 5 years. This is not in any way a reflection of Korea's general health of its external balances. It's just basically because a lot of things are going to be changing for Korean exporters over the next 5 years. As I mentioned about China, that's going to be a major driver. Other Asian exporters will feed in and take away market share from many Korean exporters. In a sense, Korea itself is going through a certain sort of form of restructuring away from its external sector, more focused in the domestic side of things. And the more it becomes dependent on domestic demand, the more it will demand imports. So that's essentially why we believe that there will be a sort of structural change in its external balances, and that will drive the fortune of the currency.
Thank you, Anwita, for your comments. Well, that is all from us for the moment. But as usual, this week will be packed with news, analysis, updates, and interviews, so don't miss them. From me, Louise Macaulay, it's goodbye for now.